In 2022, Cape Coral was America's hottest housing market. Homes selling within hours, buyers offering cash above asking, investors flooding in from out of state. By 2023, headlines called it the next Naples, a coastal paradise with room to grow. But 2 years later, that heat has gone cold. Governor DeSantis is now facing a major breakdown. South Florida, the jewel he'd polished in every speech, is crumbling. In places like Fort Myers, the dream of affordable beach living has turned into a crisis. Homeowners are seeing insurance bills explode from $2,000 to $16,000 almost overnight. HOA fees are soaring as reserves dry up, and property taxes are quietly rising too. Families who once stretched to buy are now stretched to stay. A 3-bedroom in Cape Coral that sold for $250,000 before the pandemic hit $440,000 by mid-2022. In Naples, the median price broke $950,000. For a while, it looked unstoppable. Florida was the only state where migration, money, and momentum all collided. But when insurance giants started pulling out, that momentum snapped. Today, hundreds of thousands of homeowners are locked into properties they can't afford to keep and can't sell without losing money. Entire neighborhoods are watching for sale signs fade under the sun, an eerie symbol of how fast a market can turn. And it's not just Cape Coral. From Tampa Bay to Palm Beach, closings are down double digits, inventory is up 60% year over year, and cash buyers are finally backing off, a shift we've been tracking closely. So stay subscribed to Roofline Report as the data keeps unfolding. Even the once booming rental market is cooling. In Lee County, monthly rents have dropped nearly 12% since last year as new supply floods in, the result of too many investors chasing the same dream at once. Those high-rise condos that seemed untouchable during the pandemic are suddenly offering move-in bonuses and free months of rent, small signs of a market quietly deflating. Insurance remains the breaking point. As major carriers left the state, smaller regional companies stepped in, often raising premiums to stay solvent. Homeowners who can't find coverage through the private market are pushed into Citizens, the state-run insurer of last resort. But even Citizens has warned it's reaching capacity. And when the next hurricane season hits, the risk doesn't just fall on homeowners, it falls on Florida's entire financial foundation. That's the pressure now facing the DeSantis administration, a problem you've seen us track from boom to bust. Right here on Roofline Report, for many homeowners, the pressure hasn't just been financial, it's emotional. Streets that once buzzed with open houses now feel silent. Overgrown lawns and empty driveways tell the same story. When costs rise faster than incomes, communities fade before they fall. Local builders are feeling it too. Projects that broke ground at the height of the boom now sit half-finished, waiting for financing that never came. Labor costs climbed, material prices didn't drop, and interest rates froze the pipeline. The cranes that once filled the skyline have been replaced by stillness, the physical outline of another Florida boom gone bust. Fort Myers promised families a piece of paradise at a discount, but with rising sea levels, flood insurance mandates, and new structural assessments after Surfside, the math no longer works. Even the homes that survived Hurricane Ian are facing another storm, one made of costs, not wins. Developers insist Florida's growth story isn't over, just slowed. But every slowdown exposes a truth. The state's affordability was never structural, only seasonal. Investors moved in fast, and when the profits dried up, they moved out even faster, leaving ordinary homeowners to carry the weight. Meanwhile, migration patterns are beginning to reverse. Census data shows outbound moves from Florida rose 9% this year. Not massive, but meaningful for a state that's built its entire growth narrative on population inflow. Some residents are heading to Alabama and Tennessee, chasing lower insurance and property costs. Even cash buyers, who once insulated the market, are now hesitating. Hedge funds have slowed acquisitions, and short-term rentals that once filled with vacationers now sit half vacant. In Lee County, active listings are up nearly 70% from last year, while closings dropped 22%. DeSantis's challenge now isn't just political optics, it's structural. Rebuilding trust in Florida real estate means rebuilding confidence in what was once its greatest selling point: stability. For decades, Florida sold the dream of ownership without the burden. No income tax, cheap insurance, steady growth. But that equation doesn't hold anymore. Developers are now lobbying the state for relief, not in the form of tax breaks, but in permission to delay construction inspections and reserve funding requirements. They argue that the rules meant to protect residents after Surfside have instead frozen the market. Yet for owners, the fear is real. Without those reserves, another collapse isn't a question of if, it's when. A handful of condo boards are already suing engineers over failed structural reports, hoping to lower assessments, but lenders and insurers won't budge. To them, risk is risk, and South Florida has plenty of it. Meanwhile, on the ground, communities that once felt immune to market cycles are feeling the tremor. Retirees who built their lives around HOA predictability now face double-digit fee hikes. In Miami-Dade alone, monthly HOA dues climbed 23% on average since January. Realtors report that open houses are drawing more curiosity than commitment. Buyers want to look, but not to leap. Confidence, the one currency every housing market depends on, is evaporating faster than the listings can update. The emotional weight runs deeper than any market chart. Whole neighborhoods that once echoed with construction now fall quiet. Lawns overgrown. For sale signs fading under the sun. Cape Coral's skyline of cranes has been replaced by empty lots and stalled projects. The physical outline of another Florida boom gone bust, a cycle unfolding in real time. One you'll understand best by staying subscribed to Roofline Report as we continue tracking where America's housing market breaks next.